What is good, traders? Welcome to these brand new series that I'm about to launch here, and it's a pretty exciting one. I'm super excited to do it anyway, so let's actually get into it. The goal of this series is to actually start from zero, so I'm gonna call it Profitable Traders Starting from Zero, meaning that I will drop my current models and I will start from scratch. Of course, I'm still gonna trade my own stuff because I like money. I mean, who doesn't? But in this series, I basically want to prove to everyone that becoming a trader is actually not as difficult as a lot of people might think. And I mean, yes, it is difficult. You will have to work very hard, but I see some people working years and years on end to actually get there. And with these series, I want to prove to you that if you follow the steps that I'm going to do myself in order to create a new model, you will actually be able to find profitability quite quickly. So let's get into it. The goals for this series are pretty damn simple. We are going to build a model. We are going to backtest that model. We're going to collect data on the model. We're going to refine. We're going to demo trade it, then try to get funded. So we're going to do a few challenges and then hopefully get a payout. And once we do, I will call the challenge a success, because let's get real, like when people start, I think it's like 20% that pass phase one, then it's only 3% that pass phase two. And then of that 3%, it's only like 1% to actually get to their first payout. So if we make the payout, that's going to be pretty good. So first and foremost, let's actually quickly talk about who I am, because some of you might be new here and have no clue who I actually am. So my name online is IdentityFX, and I have around 8 years of trading experience as of making this video. I initially got started with crypto and of course didn't really take it serious. I mean, 8 years ago, you could literally just throw a dice, smack your money in any kind of crypto and you would make money. And that's exactly what happened to me. Then later on, when I started to take it all a little bit more serious, I built my private capital. And with that private capital, I was trading. I've been trading for so long that even back then, prop firms didn't exist. Like for real, prop firms were not a thing. And if there were prop firms, it was likely just bullshit, or the rules were like completely messed up, you know? So prop firms were not really a thing back when I was scaling my capital. Then of course prop firms did come out and I did trade with some prop firms, and of course it helped me to scale my capital, but I noticed that it never really worked on a consistent basis, and I will not go into depth why I'm saying that. But I decided to mainly focus on my private capital. And then I think around 2 years ago, I decided to go into education, because I decided I'm a trader now. That's very nice, but it's quite lonely actually. I didn't really have any trading friends. Then I found some friends and I noticed I could really help them, like touch their lives and give them proper education. So I decided to create this community, and that has been pretty nice. And that's about, I think, 1.5 years ago that this community was created. We have created so many funded and profitable traders. I cannot even count them anymore. Yeah, it's a true passion. So my overall goal right now at this point, because I see so many people telling me this strategy doesn't work, this doesn't work, support and resistance bad, ICT bad, SMC bad, I'm going to prove that anyone can basically trade anything. You just need a slight edge, and then you need to put in the work to sharpen that edge. And that's what we're going to be doing in these series. So how you probably know me, if you know me, I'm the guy who's pulling off these insane trades like on almost a daily basis. Yes, I do it. I prove him. I back him, like everything you want. Yes, I am that guy. I am trading these massive trades, but they didn't just come naturally. You know, I had to really work for it. And yes, my models are quite insane right now. There's not a lot of people who can actually trade like me. I know a handful of people who actually can with similar stats, but usually these people, they nicely keep their mouth shut and yeah, just work in the shadows, which is not a bad idea, by the way, because a lot of leechers, guys, a lot of leechers. And of course, what you will also know about me is that I always provide proof of my executions. I always do that with every single trade. If I take a trade, I will back them. If I take losses, I just assume that you guys will believe that I took a loss. There's usually no question about a loss, but a win, ooh, that's a different story. By the way, this trade was today, so I'm not just handpicking anything. This is actually still running as we speak, so I'm hoping it will go to my take profit for around 18R. What I also do, I have a Telegram group, and I literally also created that today because I just want more engagement. And in between the YouTube videos, I also want to track the process of what I'm doing here. So that's why I decided I'm going to create a Telegram. I'm going to share absolutely everything. be as transparent as possible. And that's what we're doing. So what did I also do today? I dropped my outlook on gold. So as you can see, I mentioned that we would liquidate these lows here. We did. I then marked up this fair value gap, and I also put my target right here. I was saying we're going to liquidate this and then likely target the highs. And as you can see, if you go to gold right now, that is actually the case. But yeah, called this beforehand, of course, on Telegram. Then you can see that I mentioned that partial one was hit. This is basically the point where I was thinking price is likely going to be reversing. I did not actually take a trade here. Mine came later. I'll go back to that in a second. But then I was basically telling people we can expect some kind of a retracement. And then, of course, there is the trade. So here is that position that I showed you in the beginning with those highs. I'm still targeting those, and my stop loss is now at break even while the trade is still running. I also called this live so you guys could follow everything. By the way, I'll leave a link to my Telegram channel in the description. There will also be a Discord server where you can basically chat back and forth with other like-minded traders. So if you're into that, check out the description. All right, then my conclusion about why I think 99% of people fail to actually make models and to become profitable traders. So first and foremost, and if you feel like I'm talking to you, I might be, I just might be. If you've been trading for quite some time, still have not found that consistency, I'm not saying profitability. You could have green months, you could have red months, but if you have not found consistency yet, then I'm probably talking to you, and I'll elaborate on why. So first and foremost, 99% of traders do not have discipline, do not have a work ethic, do not have self-control. They have no willpower. They have no edge. And I'm not talking about the brain rot edge here. Guys, I see you. And they have ego problems. And I mean, our current living circumstances, the Instagram shorts, YouTube shorts, the TikToks, everything is basically building on top of that. So let me quickly elaborate on what exactly I mean. 99% of traders are willing to trade for the excitement and the thrill of it and all of the end results, but they are very afraid to put in the work. And that's where discipline, work ethic, self-control, and willpower basically meet. So they want the results, but they do not want to put in the work. I have people coming in my Discord every single day with open positions. They come to me, they say, hey, Identity, yo, man, should I close this position? Should I let this position run? And my answer is always super damn simple. What does your data say, man? And if they cannot respond to what their data says, then I say, okay, then you decide, close it or just let it run because you're gambling anyway. What I think does not matter. It is not supportive and it is not in line with your statistical edge. So do not ask me if you should let your trade run or not, because I might be trading something completely different. And that's the main issue. So people have no work ethic. They don't want to put in the work to collect the data. They don't want to put in the work to fix their model if they notice that their edge is too small. They do not want to review their losses. They take losses. They revenge trade all because of emotions, a lack of self-control, a lack of willpower, and then of course, no edge, because if you don't do any of these things, if you don't journal, you don't review your losses, you do not backtest, you don't do any of these things, then you're not going to have an edge. It's as simple as that. And then, of course, the main issue, and that is basically a logical consequence of not doing any of these things, that is strategy hopping. People try something, oh, it doesn't work. Next thing, oh, it doesn't work. Next thing. And usually they waste months or even years in a specific strategy, not actually putting in the work that they need to be putting in. And that's just, it's a shame, man. It's a shame. So if I were to start over, and trust me, trust my word when I say that these steps are the steps you should be taking. The reason why is I do private mentorship with people who I deem that deserve it. That might sound arrogant, but I get a lot of requests, guys, like an insane amount of requests. So if I find someone I think, yes, this guy is really going to be able to make it. I like his personality. I like the drive, and I see something in them. I will work with them. And for now, everyone that finished my private mentorship, my one-on-one mentorship that I do, only with a handful of people at a time, by the way, they have 100% success rate. I have not ever seen any of my students fail when we finished our private mentorship. And that is why you should definitely be listening to this. So how should you start? Well, everything starts with investigating strategies. And if you're watching this video, I'm thinking that you probably already tried a bunch of strategies, because otherwise you would be YouTube and Googling for a strategy, of course, right? So Investigating strategies, with that I mean try to really look into what fits your personality. Does support and resistance suit your personality? Is it supply and demand? Is it going to be SMC, ICT? Is it just going to be plain scalping? Is it going to be indicators? Essentially, it does not really matter. But what you should do is you should pick something that you have a belief in, something that you can say, yes, I think this is how the market reacts. Some people are firm believers that the market basically works with exponential moving averages. And, I have respect for these people because they believe in it and they probably make money with it because they have the data to back it up, right? So just pick something that works for you. If you don't have anything just yet, just try out a lot of things. But if you have tried a lot of things, then you probably already know what really resonates with you, what you really believe in, but just cannot simply master yet. Just pick that, go with that. In this series, of course, I'm going to be building a new model from completely scratch. So if you want to trade that with me, that's also going to be very possible. You can do that. You can take it as soon as I make it a consistent model. But that doesn't mean that it's going to fit your personality all the time, right? But hey, we'll see. We'll see. So you're going to then study the stats of that specific strategy. So how do you perform? How does a strategy perform with other people? Stuff like that. You're going to set some realistic expectations. You're not going to be trying to instantly make 10% a month without blowing an account. That's just not realistic. It's very difficult to become a trader. But honestly, the competition out there, you know how the world works. You know how lazy people in general are. It's not that difficult to outwork 90% of people in this space, right? So set realistic expectations and then just pick what resonates and fits your style and just go along with that. And then we have to go through the stages. So let's assume you already found your model. You can then skip to step 4. We're going to try and find a concept. And I'm going to check all of these boxes real soon with the model that I'm going to be making. This model, I decided on it today because I felt like it and it doesn't fucking work. And I have proof. I will upload a video where I tried to trade it today, forward tested on a demo account, and I had 4 losses in a row. But I'm going to make it work. I'm determined to make it work. I think it has an edge if I adapt it to the market circumstances. So we're going to find a concept. We're going to create a model around that concept. We're going to get a feel for the model, meaning that we're just going to try and chart it out. No winning and losing yet, because I know you all want to win. No, we're just going to look for it on the charts and take screenshots of it and study it. Then we're going to say, okay, which session am I going to be trading? And when we know that, we're going to try and create a strategy, meaning what is the risk management going to be? So how many risks am I going to take per trade? What time of the day am I going to be trading? What circumstance of the market am I going to be trading? Which pair am I going to be trading? Stuff like that. That's all going into the strategy creation. Then we are going to start collecting data on that specific strategy. Once we have some data, we are going to review that data and try to refine our edge. And this is where a lot of people just don't seem to even understand that it's so simple. Like if you find a consistently losing strategy, isn't it obvious that you can literally just flip it around? Like seriously, let's say we built this model and I notice that I have only a 10% win rate. If I just flip the strategy, I have a functional strategy. So don't ever come to me and say, yeah, I just have a losing strategy. Data collection doesn't work. That doesn't make any sense. Then you just flip it and you're damn well in the money. So it's all very possible. You just need to follow along and we'll get there. Once that edge is refined, we can then actually start trading the model. And do you see how trading is like the last step? Like 90% of people try to make trading the first step. No, that's not how it works. You're going to first get a model and then you're going to trade. I know that you have this tingly feeling inside of you right now that wants to go ahead and trade and just plot it on the charts already, but that's not what we're going to do. So let us talk about the model. What did I come up with? What did I create? What monster did I create? How are we going to make money here? I created the FEG continuation model. Now you're probably thinking, what is that, man? What is that? Well, very simple. FEG is a fair value gap, and I will explain where it comes from in just a second. And continuation basically means that we're going to be following the direction of the market, not in a way of a trend, but with 2 very important concepts that I will cover in just a second. But what we do know is that a continuation is overall, if we look at the market, right? A continuation of the current trend is always going to be much more likely than a reversal of that trend until certain parameters are hit. And we are going to be talking about those parameters. So with my experience, of course, I kind of get a gist of how the market moves, right? I know how it moves on different assets. And I will get to the 2 core things that I think drive the market in just a second. So what is that? What is this model? Do we all know this guy? I think we do, right? If you don't, this is Michael from ICT. Michael is basically the guy that founded the inner circle concept. I don't know if he got to the information himself or exactly how he did it, but the information that he posts out there is good. It's just he makes it very complex and his teaching style is not always appreciated by most students. It's very long, but still, if you follow his advice and look through the stories he likes to tell, I think he gives some very valuable information. I have to give him credit for that. I do not really resonate with his personality and the way he talks about people and approaches people, but other than that, I think he's a very good teacher. I don't know if he's a good trader, but he's a very good teacher and the concepts, they do make sense. So Michael meets me, Identity of X. Yeah. So you guessed it, we are going to try to use ICT concept because ICT concepts are damn popular these days, aren't they? So let's use them. Let's show and let's help Michael prove that ICT concepts are actually a profitable endeavor, shall we? Cool. So what is this model based on? This model is actually based on a model that I publicly released before, but the model didn't really work, and I'll get into why for a lot of people, but it worked very well for me. So let's actually talk about what the continuation model is that I created previously, and then let's also discuss the differences. So the continuation model is very simple. We're going to spot an active trend and we're going to hope that the trend is going to continue. We're then going to wait for liquidity to be purged in a market, meaning that a low or a high will be taken out, and then we're going to wait for the market to trade above that previous high or low again, which we call the market structure shift. So we can see here we have a purge on liquidity or a stop hunt or a sweep, whatever you want to call it. So people getting stopped out of their positions or people taking shorts because the trend line is broken, right? And then we're going to wait for price to reverse above this high again, which basically gives us the confirmation that the trend is ready to continue. Then we are going to map out that leg that we created that displays above that previous high. And we're going to basically look at a fair value gap that is in between that. And these fair value gaps are going to be important in the new model as well. Then we are going to try and squeeze out an entry in that fair value gap below the 50% level in this case, which is going to be discounted. So basically a more favorable position to buy than we were to buy right here, as you can see, because we know imbalances like to get refilled, right? And then we're just simply going to target the low hanging fruit or 2R or whatever it is that you like to trade the continuation model on. And there's an example of this live picked from the chart. So I immediately marked it up and just smacked it here. So this is an example, another example, and here even one more example. Now, there's one big problem with this strategy. And what is the problem? Well, people are saying, for some reason, the market seems to not really like me doing this. As soon as I am very convinced that a certain trend is happening, and I see big moves down and big moves up, the market seems to reverse on me. Well, how could that happen? And the simple answer for that is you have to look at this particular leg right here. We know that this leg basically already made the majority of the move. So if we could simply find a way to already be part of this particular move consistently, then our TP would be hit way sooner. And we wouldn't have to run above previous highs or lows to make it work, right? Another problem is that if you're waiting for a trend to form, and right here, this is a reversal trade, by the way, so the market was first very bullish, then if you want to capture a trade here, it's going to be very difficult for you to actually take one. So here you miss the entire move, and that just hurts sometimes, doesn't it? Just sitting there with your hands crossed, or sitting on your hands basically, and not being able to participate at all because you're waiting for a clean trend to form. So that's a big issue for a lot of people, why people do not like it. And of course, overall, people like to take more trades. So what is the solution here? The higher time frame. We're going to just smack the higher time frame into play, and we're going to use two really core principles from that higher time frame. So when I say include the higher time frame, I don't mean trade a higher time frame. No, I mean you are going to use the higher time frame as a confluence for your entries on the lower time frame. If you are going to be trading the 15 or 5 minute as your higher time frame, then your entries will be on the 1 minute. Higher time frame of the 1 hour is going to be 5 minute trading, and the daily or 4 hour you can then trade on the 1 hour, and the weekly you can then take trades on the daily. So how are we going to do that? We are going to spot big moves, because we know that big moves are not created by retail. They are created by smart money, the institutions, the banks. Retail Joes are not going to be able to make a move just like this. It's just not going to happen. If we see these type of moves, it means the banks, the institutions, they think or they want price to go up, right? And we are going to try and trade away from them. And we're going to combine it with two very core concepts, which I'm going to cover in just a second. But let's just take a look right here at what I mean. If we can take trades away from specific levels till the market tells us otherwise, we're going to make money, right? Let's start right here. So here we have this beautiful high. We start trading away from that. We break through all the structure, price is pushing lower. We would be waiting and waiting with the original continuation model to actually grab an entry. Oh, where is it? Where is it? Here we see it, right? Oh, no follow through. Here it is. Oh yeah, follow through, but a massive leg down followed by a huge reaction where I see people enter right here. Ooh, I'm going to short. No, it's not going to break this level anymore because look at this reaction. Right? So we're going to trade away from this. And while we do so, we can take entries from FEGs if a sweep occurs. So right here, like the move is just happening, right? Here we can already take a short in a fair value gap. And I'm sure that there was one here, was also one here, probably one over here. Here in this leg, a lot of opportunities as well. And then we see the big move where we're trading away from now. So we have all this structure here. We start to trade through it, indicating that the market wants to reverse. Who wants to reverse the market? The institutions do. So then we can wait for sweeps and start trading in that direction. Here we have a sweep, right? Wait away from that, tap into an FEG, continue higher, ching, money. Here we have a sweep, tap into an FEG, move higher, ching. Here we have a sweep, tap into an FEG, move higher, ka-ching. As you can see, this really starts to make sense, doesn't it? Cool. So what are the core tools that we are going to be using here? Who's that Pokemon? Liquidity. And now who's this one? For value gaps. And that's it. Like seriously, these are the only two things that we are going to be using to trade. And no, we're not going to use market structure shifts, this and that. Not for right now. We're going to keep it simple. I am the guy right now. I'm going to act as a guy who found Michael's channel and I was too lazy to go through all the content. And I learned that there are two things. There are fair value gaps and liquidity. And that's what most people like got out of that 2022 mentorship anyway, which is like the most popular. So I'm going to be that average Joe. I might just be you who knows about liquidity and FEGs. I don't mean to insult you, by the way, by no means. I do respect everyone watching this video. I respect everyone for that matter. But we are going to be trading based off of liquidity and off of fair value gaps. So let's actually hop onto the charts, shall we? Let's actually use today here. By the way, this, for those who are interested, I know these videos are long, but trust me, are going to be filled with value. You're not going to want to miss out on any of it. If we are taking a look right here at the call that I made today, this is where I entered. So this is gold right now. I'm still in. My stop loss is here. I already took 80% off at 10.8R. So I'm already pretty happy. And the rest runs till 18R. Yeah. With that out of the way, let's actually take a look at today's price action. So let's assume we are going to be using the 15 or 5 minute. Let's do the 15 for this example. And we are going to try and trade away from those levels. So what are we going to be looking at? And yes, this is hindsight. We will get into backtesting where I don't see what's going on, stuff like that. But first, we need to understand how this model is going to be working. So here we have a very clear low and here we have a very clear high. So what does the market do? The market trades below this low right here and starts moving up aggressively. We can then see that it breaks multiple structural points. We have this being broken and we also have this being broken. So now the idea is to start trading away from this specific low until the market starts to break structure to the downside again. And we also need to take into account liquidity. So this right here is not going to be a valid break of structure. So if I were to see this low being broken, I would be concerned because this low fueled that move higher through structure, right? But as long as I don't see this broken, then I'm not concerned because now we're just building liquidity, which is indicating that price wants to move higher to me. And that's my experience, right? So I'm giving you all of that for absolutely free. So now that we know how we are going to be trading, we are going to jump to the lower time frame. We're going to jump to the 1 minute and we're going to start to see where we can take certain positions. So this is where we basically had the initial sweep of our structure. So we're going to jump to the charts. We can see, yes, we're pretty likely to start continuing higher. Now, all we need are confirmations based off of liquidity. So we already know that the higher time frame liquidity was taken. So that's a check mark. Boom. Higher time frame liquidity taken. And now we want to see lower time frame liquidity to be taken. So here we have a 1 minute low. We sweep that 1 minute low and we form, do you see it? I'm sure you do. We form an FEG. Wow, Cool. All right. So we're going to take a long position off of that FEG and we're going to target 2R. Boom. That runs into profit. And if you feel like I'm cheating somewhere, just let me know and we'll figure it out. I'm going to live trade this anyway. I'm going to backtest this anyway. So we'll see how this model performs. Here we see a sweep. We push higher. The FEG did get filled right here. We place our stop loss below the sweep and then we target 2R. And wow, again, noise. Another sweep. Cool. Then I'm going to put these out of the way. This one is success. This one is success. So let's say we were risking 1% per trade. We're already up 4% because 2R, you know? So that is legit half of a challenge on most prop firms. Cool. So now we see this low being put in. We see that right here, there is no real sweep. We could say that this is a sweep, but to me, again, we have to take into account liquidity. We have relative equal lows here, which means there is liquidity. So we are going to be using that. So we do not take this position. We wait for a clear sweep of a low. We take this. And as you can see, there is no low nearby here. We only have this far away. We take out these and then we react to it. Then we form a fair value gap. Boom. We can take a trade and I actually took this trade live in the group. And yeah, now of course it looks like it was a success, but I entered on the top here and it just didn't cut that 2R, unfortunately. I even did a scale in here, I think. So price was running. I noticed that we built a lot of liquidity. We swept that. And then I even scaled in here, stop loss right here, and then target 2R. And this also results into a loss. So I think you're starting to get the general idea, right? So now the problem here is we are still waiting for sweeps, right? So let's just continue. Let's just continue the flow. So we are up 4% and then down 2%. So we're now at 2%. Here we can see we have a sweep and another reaction, and we actually have a fair value gap right here as well. So let me mark it out for you. Very, very tiny, but it is one, right? So we take an entry off of it. Boom, stop loss below the sweep. Target 2R gets filled. Okay, no sweeps here. We build up liquidity down here. We have a sweep. Price starts pushing higher. We only get a fair value gap right around here. Let's assume we took that, which would not be a smart idea just before news, but a loss. And then again, right here, price already broke through the high with a sweep. So this is not a smart position to take if we use liquidity as a core thing, right? This definitely looks like a liquidity perch to me, right? So we're not taking that. And then price just shut down for news, no real sweeps at all, right? Here was a sweep though, as you can see, swept this. My entry was a little higher. I was focusing on this. I'm not going to give too much details on that, but cool. So we started to push higher, had a massive FEG, but this of course is not something you want to be scalping. Then we were still trading away, right? As I explained, let's go to the 5-minute and visualize this for you. So we're now right here. We're still trading away from this because no other significant level got liquidated. Here we do liquidate something potentially, but we need to have the structure break to actually confirm that. So jumping back onto the 1 minute here. So this no fair value gap sweep, no immediate fair value gap other than this one right here, which we can again take. Here is that fair value gap. Here is the low of the sweep, right? We had a sweep right here. And then we also had one right here. So boom, that counts. And then price just runs to that 2R very nice and swiftly. Then right here, we also had a sweep of two lows. And if you would have taken a trade here, would be here, we would have been stopped out quite quickly. So that's also a loss. And then this is not a sweep. This is just price pushing lower. Here we have a sweep, clear one, but no entry, I believe. Perhaps here, but unfortunately, it's already after 12. And I only trade the New York session. And for me, the New York session ends at 12 p.m. or 0 p.m. New York, right? So I do not trade after that anymore, unless I'm in a position like I am right now. So if we take a look at what our positions did here, and you're going to see we're taking quite a bit of losses, which I'm not used to. So it's going to be very interesting to actually see how this challenge goes for me psychologically. So we have +2, +2, -1, -1, +2. And then here we have another loss, so -1. And then here we took another win, +2, and then another loss, I believe, -1. So if we add all that up, we have 4, we have 2, we have 4, we have 3, we then have 5, and then we end the day at 4. So 4R for the day. So if you risk 1% per trade, that would make 4% of profit on one single day of trading. Very nice. And I think right now you do get the idea and the picture of how this model is going to look like, how it's going to shape. In the next video, I'm going to establish what I think is going to be a solid risk profile. So I'm going to talk about how much I'm going to risk, when I'm going to trade, and then we are going to basically start with data collection. Data collection wise, I already did an experiment with what I'm showing right here. So I went back in time. This was the backtest. I think the results that we saw in TradingView, 2 wins, 2 losses, 50%. So in the testing that we just did on screen for today, we actually had a 50% win rate, and this backtest basically confirmed that. We're now at 45.8%, but we only have 24 trades in the equation. So yeah, 24 trades is not really going to be a benchmark at all. So we definitely want to squeeze this up way higher, but in the process, of course, we need to collect screenshots of all the trades and of the conditions of the higher time frame, just so we can use all of those details in Confluences later on. But yeah, I think this is the start of the series. This is the model I'm going to use. These are already some backtesting results. I think you can already see where this is going. And I'm super excited to actually continue with the series, teach you guys something, and hopefully build yet another profitable model. I have quite a bit of profitable models already, so I'm quite confident that with the right work and mindset, we're going to make this. And to add to that, I'm going to create data sets for the community, for the elite members. So those are basically the guys that purchased my course and are in the premium side of the community. I'm going to create a Notion database and data set for you guys, and everyone can actually go ahead and collect data together. In order to access the data, even the elite members need to put in the work. So I'm going to have you backtest it yourself. You are going to collaborate on building the data set, and then we are going to review each other's trades. So we are going to have a percentage that people can check. So if 80% of people say this entry was actually invalid based on the confluences that were checked, then we're going to say, no, this trade is invalid and not collected for our data. But if 100% of people say, yeah, it's definitely correct, in that case, we're going to allow it to be in the data set. The community is awesome, by the way. If you're looking for a solid community, that's the one. People in our community are just spot on. They're killers. They're super good at what they do, very consistent, very hard workers overall. So looking forward to this, guys. I will see you in the next episode, guys. Bye-bye.